Hi everyone. Today we are breaking down the Q3 FY26 performance for the Indian retail sector. The big headline: it is a tale of two markets. Premium brands and value-focused giants like Vmart and Vmart showed incredible resilience with steady growth. Vmart reported a massive 18,101 crore rupees in revenue, while Vmart reached its highest ever quarterly profit. However, the mass market stayed cautious during the festive season, leading to mixed trends in the QSR and lifestyle segments. The silver lining: most companies are still expanding aggressively into Tier 2 and Tier 3 towns, betting on rural recovery and the new GST 2.0 reforms to supercharge demand in the coming months. Why is the Indian retail sector a massive opportunity in 2026? It comes down to three structural shifts. First, rapid formalization. With India moving toward a $1.8 trillion retail market, organized brands are finally winning over unorganized players, especially as GST revisions and lower inflation boost consumer trust. Second, the Bharat surge. Growth in Tier 2 and Tier 3 cities is now outpacing metros. Rising aspirations in smaller towns are driving double-digit demand for branded apparel, footwear, and food services. Third, the structural income play. As per capita income hits $2,600, spending is shifting from essentials to lifestyle wants. Combine this with the record high participation of women in the workforce, and you have a decade-long consumption explosion. In 2026, retail is not just a trade. It is the strongest domestic consumption play in the market. Short-term, medium-term demand, gradual recovery in discretionary spending, supported by GST rate revision, margins. Recovery in margins will be gradual. Domestic consumption play, likely to deliver better returns. In this volatile environment, rural demand to pick up, increase in government spending and urban remittances, consumer price inflation to start receding, room prices remain stable. Vmart has reported a resilient performance for the third quarter of fiscal year 2026. Revenue reached 1,126 crore rupees, growing nearly 10% year-on-year. EBITDA surged 22% to 210 crore rupees, with margins expanding to 18.6%. This was driven by improved gross margins and aggressive cost control. Expansion strategy. During the quarter, the company opened 23 new stores, 21 Walmart and 2 Unlimited, and closed 2 stores, 1 Walmart and 1 Unlimited, taking the total store count to 554. Vmart 458, Unlimited 96. Over the medium to long term, the company targets a 13 to 14% annual increase in square footage, with 60 to 65% of new stores coming from the same states but different towns. Positive long-term view. Vmart is well placed to benefit from rural recovery and market share gains from unorganized players. Strong footfalls, disciplined cost control, and steady store expansion should aid performance, while the recent announcement on GST rate cut is likely to spur consumption and boost discretionary spending.